It's another Jamaican Sunday afternoon. Rice and peas, oxtail, carrot juice. We smell it from here at the studio, you know. We want to big up the viewers from Hanover,
Portland,
Westmoreland,
St. Anne,
and St. Thomas.
and Jamaica.
Big up. Thanks for watching. Thanks for tuning in. So, Sheena, you all right?
Yes, I am.
All right, so it's another Centrally Speaking.
Indeed.
We're going to talk about something big today. You know, many persons have heard the term financial stability, but have no idea or understanding of what that is about.
So, today our very special guest will shed some light on this engaging topic. We're fortunate to have with us the head of Financial Stability Unit at Bank of Jamaica, who will shed some light on this very important topic right after we take you to the streets.
Do you save or invest your money in the bank or any financial institution?
Yeah, man. I save in a bank, man. A bank save. That's why I'm saving that. Because I save for it because we have it at your house. You pick the job late, your wife job late, you want job late for go drink beer and them something there. So we have it in the bank, you know you don't want to go job late. You see what I say? And you can get a loan from the bank for buy even a car, a house, or anything.
No, I don't, because it kind of a little difficult for us to go to the bank and get out the bank book. So we kind of find it a little hard. That's why we don't normally save in the bank.
I do have money saved up in case of emergency, because if a rainy day comes about, you have to take care of it. Well, in the short term, anything can happen to you. In the long term, it can be a case of a family member being sick, whatever. That money can be used to take care of them.
I not too go bank still, big woman thing. I like the bank thing from cash plus mash up, I not too trust bank. You know what I mean? Because they charge all interest for save your own money, you know what I mean? So I just save money at home. So anytime I want it, I know where to go feed. You know what I mean? That's why I'm not too go in a bank.
Welcome back to Centrally Speaking, a program that opens up the conversation around important matters of economics and finance, matters of national importance that have an impact on your life. I'm Sheena.
And I'm Anna. We're pleased to welcome in studio our guest from Bank of Jamaica, Dr. Leo Rey Gordon. The doctor is in the house. Gonna prescribe some financial stability for us. Welcome, Dr. Gordon.
Thank you, Anna.
First off, Dr. Gordon, what is meant by financial stability?
Well, financial stability is when our financial institutions and our markets on a whole are able to operate normally when economic conditions are less than ideal. In other words, when things are bad, our banks are still able to issue loans and operate in an efficient manner.
Okay.
So when it's about, like, if a hurricane happens, you know, earthquake.
Right,
that,
right.
like some
Or if there's a recession, right? If there's some kind of recession, you know,
right.
if jobs aren't as abundant, if we're not making as much money as we would like.
God forbid.
Yeah, God forbid, but the banks will still operate efficiently.
Okay.
How do financial entities ensure their resilience in less than ideal situations, like a recession, like a disaster?
Right. Well, first, we would hope that macroeconomic conditions are stable. People are employed, they're making sufficient wages, businesses are earning profits. However, in a recession, that may not be the case. There may be less than ideal conditions, we may have lower employment, and business aren't earning as much income as we'd like. However, in these cases, we still would like our banks and other financial institutions to operate as effectively as they would normally do. And they do so by ensuring that, one, the assets that they have invested in are of high quality. They ensure that their funding source are typically stable. And as well, they ensure that they are nimble enough such that if depositors require their money, they have sufficient liquid assets on hand to provide their funds. So a bank may have, for example, stocks or bonds. If those are liquid, it is able to sell to another entity for cash, so that when you want your deposit, you can easily access it.
Okay, so based on that, what are the objectives of Bank of Jamaica in preserving financial system stability?
Well, those objectives are outlined in the law, the Bank of Jamaica Act.
Yes.
And the first primary objective is to ensure that we have complete and sufficient surveillance of the financial system.
Okay.
so that we have our eye on the operations of financial conditions and of markets. Secondly, if we believe that there is some kind of concern or threat or risk to the financial system, we are able to deploy tools and policies that may be able to allow for resilience to such shocks.
Speaking of policies, what are some of those policy measures that safeguard financial system stability in Jamaica?
Well, first we look at the prudential rules. We ensure that...
And by prudential, you mean?
Yes. Break that down for us,
Right. Take time with your Sunday, you know. Remember Sunday, you know, we just eat.
Right, we just eat the food and so forth. All right. So first, we rely on those regulations that are outlined in the law.
Okay.
So for example, our banks need to ensure that they have sufficient capital to absorb shock. They need to ensure that they have sufficient liquid assets in case that depositors need to withdraw their funds. They need to ensure that there is an ability to assess risk in an efficient manner. Beyond those rules and regulations, the Bank of Jamaica still has the ability to employ or require additional measures that may help with financial stability.
Dr. Gordon, I want to ask a different kind of question. Which parish you come from?
Yes. Tell
Well,
us.
I claim 2 parishes, you know. My family is from Westmoreland, but I'm born and raised in Kingston.
Okay. So, for your family in Westmoreland, what would you like them to come away with from this conversation about financial stability?
Well, I mean, for every dollar that they earn, to ensure that they save sufficiently, they choose wise investments so that when I come back to Burn Savannah, we can have a good time.
It's on swims.
It's on swims. And jerk pork.
And jerk
Jerk
pork.
pork.
Okay. And from Dr. Gordon, we go to the tip of the day.
Want to build wealth? Spend less than you earn. No matter how much or how little you're paid, you'll never get ahead if you spend more than you earn. When you decrease your expenses, your cash flow increases.
So, financial system stability was the topic in focus today. And it's now time for our fast facts. Number 1. Financial stability is the extent to which institutions and/or market as a whole are able to operate in a normal manner when economic conditions are less than ideal. In other words, the normal provision of financial products and services to businesses and households continues in both good times and bad times. Number 2. A sound domestic macroeconomic environment allows our financial institutions to plan more confidently, resulting in the delivery of services in a reliable manner and at an affordable cost. Number 3. Our first line of defense are the prudential rules and regulations and the codes of conduct established by the regulatory authorities. Number 4. They dictate how much reserves a bank must hold at the central bank to satisfy emergency pull-on deposits. And they dictate how nimble an entity must be in their ability to convert their investments to cash. And number 5. Beyond these prudential rules, the bank has the ability to issue further rules and standards as are applicable for safeguarding financial stability. And that's it for our Fast Facts.
Well, that's it for our program this week. That's it for financial stability. Follow Bank of Jamaica on Twitter at CentralBankJA or like us on Facebook. You can also visit our YouTube channel. Check our website, boj.org.jm.
I'm Sheena.
And I'm Anna.
Thanks for watching.
See you next week.
Centrally Speaking is a production of Bank of Jamaica.